Hey everybody, it's Adrian Zdunchuk, CMT Charter Market Technician. Some people know me as Crypto Birb, and this is yet another episode of our RWAs series, which is such an interesting topic to be discussing, especially this time of the year where crypto is not so much, I should say, of much interest these days. When the sentiment drops down, a lot of people, are walking away from crypto, while RWAs is something where just maybe the hidden revolution comes into fruition. And we are here joined today to talk about innovations and trends in RWAs, joined by the very special John Patrick Mullin, JP of Mantra Chain and of Soma Finance. And well, there are a lot of tags on your Twitter bio. There are a lot of good tickers. There's a lot of good story. There's a lot of incredible following. So congratulations to you on that on front. We're also joined by Paweł Łaskarzewski of Nomad Fulcrum. And gentlemen, how are we doing today?
Very good, sir. Thanks for having me on.
Right on.
Amazing, especially that everyone expects the market to grow up very soon. So super bullish.
Right on. Bullish is the right word, especially when it happens in the terms of the technical bull market. Even if we tend to forget during the dip and decreasing sentiment when the markets go down, typically we are not really much endorsed by the market itself to kind of like kick it off. Although the RWAs, the advancement, the growth, it doesn't slow down, right? We have Larry Fink on our end talking about crypto as a flight to quality. We have Larry Fink talking about Bitcoin as one of the hedges against the global domination and the falling disruption from the banks that's been going on. And here we are with RWAs, the tokenized assets from the real world. And what would you say in terms of the investor and corporate sentiment? What it is on the tokenization? What would you say, JP? How you see it from your lens? What's the sentiment from the investors? What's the sentiment from the corporate side?
Absolutely. I mean, I think on the retail side, particularly, it's a bit of a newer asset class in terms of like tokenized access to these types of products. So there's absolutely a little bit of investor education that needs to be done. We're definitely trying to push retail adoption of real world assets on permissionless blockchains. And a number of different projects in the space are trying to do the same thing. Ondo has done a great job with their tokenized money market product, USDY and OUSG, as well as other, tokenized treasury products. Magic Eden, I think, just got an investment from Binance Labs and a few other big ones, Hashnote and whatnot. On the flip side, institutional investors and instos have, in my opinion, had product market fit with tokenized assets for some time now. You've had trillions of dollars being transacted on permissioned networks such as JP Morgan Onyx blockchain. And, that's great. It's good that the institutions are here and they're, actually interacting in this stuff. But we're a little bit more excited about the opportunity as it pertains to the broader mass public. And obviously these type of products living on permissionless open blockchains. So still a bit of a long way to go, but you can absolutely see that there's a lot of attention. I mean, RWAs have been one of the best performing token asset classes within the space. So hopefully that will continue as, Uncle Larry keeps shilling tokenization going forward and we keep building cool stuff.
Hopefully that remains the trend, right? Because speaking of the key innovations, the entire key separation of our focus as investors, as enthusiasts, as the builders, just like you mentioned, GP, it all goes into not only high net worth individuals, into retail investors, institutional investors, corporate investors. What's your take, Paweł, on the latest kind of like trends on that aspect?
I see the big trend of big boys joining to the space, to the tokenization and RWA space. Why? Because I believe that has been said long time ago that they see a big potential and they see a new opening for the financial market through blockchain and through tokenization. Tradability 24/7, easy transactions, no middlemen, more fees for them because they can tackle much more transaction by themselves, and they can. The most important, they can tokenize assets that are illiquid, so they can provide liquidity to the assets that haven't been liquid before. And as we see, Citibank, JP Morgan, and everyone that is the top tier in the space, Santander, etc., all those guys are deploying billions of dollars into the space, into building things. The main problem of the big boys is that they do not build anything by themselves. They do M&As, they do outsourcing. So most probably within the next couple of years, we will see a big inflow of capital from those big institutions into the space, into the projects, into the startups that are promising to get a portion of what they do, integrate within the current services, and to provide this to the broader audience, to the users throughout the banking application, through the corporate banking solutions for businesses, etc., etc. So I believe the next decade, half or the whole, is going to be super interesting, especially from that point of view that the big boys will join the space. And one of the things that happen is our regulations that are being implemented right now worldwide, which are basically being implemented because they want to make a room for the big organizations and the financial companies to join the space. Those businesses, those companies without regulations, without the proper regulations, can't be in that region of the crypto market. So yeah, I'm super bullish on that, and I believe that the next decade, especially for that part, for RWA tokenization, is going to be like the main driver of the blockchain industry.
Right on. Speaking of special parts, right, that you're referring to, Paweł, JP, I have a question for you, because you as a CEO, as a co-founder, you have access to obviously a lot of data, a lot of good statistics, right? There are a lot of trend observation skills as well, if you will. And what sort of like specific RWA classes are trending from your standpoint?
Yeah, so I mean, I think we kind of take the perspective of being relatively agnostic at a chain level about what could be tokenized. That being said, we're definitely seeing some low-hanging fruit opportunities, as well as just kind of a little bit where the most of the traction is occurring, and kind of where we're seeing the most openness to participate. And to be honest, big number deals coming online and coming on chain is across three primary focuses. The first would be real estate. We've announced already a $500 million deal with a Dubai-based real estate developer called Mag Group. We have bigger ones in the pipeline, so you're talking like $1 billion plus type of transactions. That's one. We're pretty bullish on that, particularly when it comes to like not just tokenizing SPVs, but finding either new financing kind of paradigms and products that you can push into this area, or even tokenizing the actual title deeds. That requires significant coordination with governments, but it is something that legitimately is happening now, and something that we're actively working on. The second one would be financial products, whether that's funds or other types of more like just pure yield or appreciation plays, investment plays. Some of our bigger investors are legitimately bank, massive hedge funds, and a lot of the products that they're bringing on chain are tokenized versions of what they would already be participating in the real world or the TradFi side. Of course, on chain, maybe there's a degree of access that can be given to non-institutional investors, smaller check size, a little bit more easy ability to actually like participate in these type of products. Of course, with like additional incentives on top, it could be a better yield opportunity as well. And this could be across money market funds, like what Ondo is doing. They're a partner of ours. Private credit, private equity, see a lot of traction there. And then the third one would be content and IP. And this is like tokenizing, whether it's music or entertainment, movies, catalogs, fan tokens as it pertains to artists, movie stars, sports teams. A lot of this IP we're seeing. I'm actually wearing my Story Protocol hat. Story Protocol is the IP layer one that's launching later this year. They're doing some pretty cool stuff with this, and we're looking to collaborate with them on IP. So these are the three major asset classes, and part of it is, again, big eyes, big attention, easier sell to people who understand what these things are, because there's a lot of engagement, there's a lot of understanding, and honestly speaking, big numbers. And I use the example of like I like to collect watches. I enjoy that, but how many tokenized watches are you going to need to have $1 billion in a deal? Like tens of thousands.
Right on.
Right on. I can talk to one real estate developer and they'll give me $1 billion deal. It's a very different paradigm.
Yeah. What's your favorite watch, by the way? What's your favorite watch?
My favorite watch?
Yeah.
I'm a big fan of the general the Royal Oak make.
Hey,
I really like the band. Yeah.
Rally Brothers. I like it. I like it. I dig it. I truly subscribe to it as well as to the watches too. Also to the hat that you have on the top of your head.
Thank you.
Right on, my man. And that takes me literally to the next point, right? Because having, just like I mentioned, Larry thing on our end, this brings a lot of spotlight to the entire asset tokenization as the pending, well, quote unquote, hidden revolution, right? This is something so at times so underground, so quiet at times, that this may be literally like a hidden revolution, right? Because not only spotting those trends, like you mentioned, tokenizing content IP, which is something incredibly interesting. The question is, how do we actually leverage that, right, Paweł? What would you say? How do we tokenize the music? How do we tokenize the content? How do we tokenize the IP from your perspective?
Yeah. So I will give you an example, the interesting example. Like, you have your phone and you took a photo with your phone, like of the interesting, nice view. And the question is how you prove that it's your IP, how you prove that you are an author of that, right? So it's on your phone. Everyone can copy that. You can send this photo throughout all the applications, all the chats, all Telegram, etc. But if you would tokenize that asset, it will have a very unique presence on the blockchain. And then you can still send it to everyone. But this ownership, this part of the ownership, can be only brought to you. And you can do this with any kind of IP, with the music, to provide tantiums to the people from the music they own. You can do this with private markets, with capital markets, with financial products, with everything. You can limit this with access. You can make it unlimited access, etc., etc. So you can do a lot of stuff. And the main thing is to understanding, and this is what people have a problem with, because people do not understand the problem, the issue of ownership. Like, I have money in my bank account, and I think that I owe this money. Like, but if bank will block me access to that money, I don't have access to that money. I cannot do whatever I want with that. I'm the lease taker of my money in the bank. I have assets, stocks, other things, final ETFs, anything on my brokerage account, and I'm still lease taker of that, because that can be locked anytime without my approval. So the main thing to move with the tokenization, besides the big institutions that are jumping into the space, is education of the people, so they can understand the advantage of being an owner of actual IP. Like, today you have an agreement that you are an owner of, let's say, IP of a song of Eminem, like the friends of one of the companies I was investing in the past. And they have this on the paper, but they cannot trade it easily. It's not a tradable asset. So you need to go to the notary, you need to sign another agreement, you need to do this with the law firm, and then you can transfer ownership of such an asset, of such an IP, to someone else. But with tokenization, you can have an asset on chain that you can sell with usage of the swap function. So we are swapping basically USDC or anything, tickets for Justin Timberlake concert with that IP access, and then you can do this easily. Of course, the main important element is which very often most of the companies that are doing any kind of tokenization on chain lack from, is binding between this on-chain asset and this real assets behind, because very often there is no legal binding. Very often, most of the, like, you were speaking at the very beginning about a very interesting concept of real estate tokenization, but most of the companies that were doing this in 2021, you remember there was a bull market of RWA of real estate tokenization, but most of the companies did it in a way that there was a company that owned the real estate, there was a token that people owned, and there was a promise that that company will provide some sort of API to the people that owns the token. But there was no legal binding. So, for example, if the guy would have a divorce, the wife would took over the company, she will say, I will sell all that stuff that is in the company. I don't care about those token holders. And she's right, because there was no legal binding. And that's very important part of the whole thing. And I believe this is what the tokenization, what is crucial in the tokenization of the asset.
100%.
Right on. And there's Abigail Johnson, right, who's CEO at Fidelity Investments, saying that blockchain technology isn't just a more efficient way to settle securities. It will fundamentally change market structures and maybe even the architecture of the internet itself. And speaking of which, JP, from your perspective, again, CEO, co-founder, you have a lot of insight into particular strategies. So imagine you are a new chain coming into this space. You are a new company, you're a corporate investor. What sort of strategies? How do you take advantage of those RWAs, tokenized assets?
As a new project trying to build, for RWAs, or
for instance, yeah.
Okay. I think one of the things that we're seeing is this idea of actually utilizing this concept of like real yield to subsidize effectively token emissions, right? So like if you look at the historical, DeFi, past, yield was generated either by farming strategies, which is kind of like a net zero, or token emissions, which is basically like a race to the bottom, unless you can find real value accrual. And in many instances, if these things don't have, true value capture mechanisms, it's all just based off of narrative, speculation, hype, and maybe some crafty financial engineering, right? But there's no real value being created. So I think, real world assets provide an opportunity to backstop at least a portion of it. I mean, tokens are great, right? Like I think crypto tokens, RWA tokens, these things are all awesome. A lot of them aren't worth much, but if you figure out the ways to kind of optimize around these different constructs, it does give you the ability to kind of like create a little bit of the best of both worlds, where you're subsidizing, token emissions that can basically be used as effectively like customer acquisition costs for your platform, for your product, for your chain, for your app, for whatever you're trying to do. But at the same time, you also get this idea of, hey, there's like real cash yield being generated in some of these RWA products that can be used to actually subsidize just, burning tokens onto people that, eventually might go to zero if you don't figure out token value capture and emissions and inflation and all this other stuff. So I know that's a little bit of a broad answer to that question, but I actually think that that's a really important thing, because it prevents this idea of basically going from, ecosystem to ecosystem, chain to chain, and just farming and almost being like vampirical, taking money from it and then just leaving. In our instance, really what we're seeing is like, you can actually take profit in the ecosystem, in the Mantra ecosystem, and then just, instead of, hey, I'm going to go put that in my bank account, why don't I just put that into a tokenized product that's earning me yield, that's like maybe a tokenized real estate opportunity that I can appreciate in value over time. And you're actually like, you're not ever leaving the ecosystem in terms of value creation. And in fact, it really becomes this like reflexive, property where, like, if you're someone who lives on chain like I do in many instances, actually you're going to have more opportunities for different types of products on chain than you would off chain because of the access and because of all this different stuff. So that's like the really cool, paradigm that doesn't really exist yet. And once we get there, it's going to be pretty game changing, in my opinion.
Right on. And there is an instance about the future, right? Because ultimately we are heading towards certain foreseeable future. For me, the context of what matters truly to the market from the financial perspective, from also what is followed by quote unquote adoption or the mainstream interest, is the time frame of the next 6 to 10 months, just maybe 2025, 2026. I'll be very cautious, entering into the bear market. Typically, that you would go with the pattern and setup of 2022, 2018, and 2014, and all of that goes with S&P 96 years back, right? As it's glued to some stock market presidential elections model, and it all comes to the question: what's next? This is the most frequently asked question on the crypto Twitter, I'd say. What's next? What's the next coin? What's the next big thing? What's the next narrative? So, JP, tell me, what's the direction that we're heading in terms of the tokenized assets?
So I don't know about what's exactly next in detail, but I could say kind of like where we're seeing these different types of phases. So I think right now we're in phase one of real world assets as it pertains to like permissionless, open, like more retail focused adoption. Phase one is really supply side. So I think that the key considerations here is, how do we bring high quality assets on chain, and not just any asset under the sun that we want to bring on chain with the hope that it becomes more valuable on chain. Like, we need high quality assets that you'd buy in the real world, irrespective of them being on chain or not. So that's number one. And that's happening today. I think phase two is when these things start to become a little bit more traded and liquid in the secondary market. That is going to take time because there's a lot of regulatory constraints there. Asset class by asset class is different. Jurisdiction by jurisdiction is different. And particularly when you're talking about retail investors, like that's when regulators really care. And then phase 3, again, I'm not going to put really necessarily timelines on this. I have absolutely no idea. But I think it is inevitable. Phase 3 is the composability of RWAs in DeFi and all different types of financial primitives, whether it's borrowing and lending, using them as margin and collateral in different exchanges across different DeFi applications, across different chains. That's when, in my opinion, you have this like aha moment where you have like the holy grail of being able to access any product under the sun from your mobile device anywhere in the world at any time. And you can do whatever you want with it from a financial perspective. Like that's the iPhone moment for RWAs. And I think that's coming, but it might take a few years.
Okay, right on. And Paweł, when you're in talks, imagine you're in talks. Actually, you don't have to imagine, probably. With family offices, for instance, right? What would they say? Where do they place their focus, knowing that, again, the future is possible to some extent to quantify? You can assess the trends. You can see where it's going, right? Based on the continuity and anticipate certain changes in some particular directions. What the family offices, for instance, direct their focus on?
So, as always, they look for more money. So they look for generating profits somewhere. So to deploy capital into profitable products. The main problem of today financial markets is accessibility. Like if you are a Korean family office, you most probably have a lot of accounts within Korean brokerage platforms, etc. If you want to go overseas, you have a lot of additional paperwork to do. This is a problem with tokenization. Basically, we are going to completely different level, and we'll refer also this aha moment that was mentioned before. So tokenization basically is making any type of asset on the blockchain, but the main thing about the blockchain is to provide one universal underlying layer to exchange any type of digital assets. So today, that iPhone I can buy for $, but why I cannot buy this iPhone for 5 stocks of Tesla that have the same value? Why? Like it's an asset that have any kind of value. If there is a deal between two people, I should be able to do so, but there is no possibility. There's no integration of a US stock exchange with the Apple Store. Why I cannot use my free Tesla stocks to buy some Chinese factory private equity? I cannot do this because it's not possible. But if you will go a little bit deeper down into what tokenization is, and you will see every asset, which is an iPhone, which is an stocks, APY in some structured products, a hedge fund participation unit on chain. You can trade anything for anything. Like I can give you a ticket for a super rare concert of some pop singer or something, and you can provide me a free stock of Berkshire Hathaway's Series B class or something. And on chain, it's possible, but it's not possible on the current level how all the IT systems and global capital markets, and not only capital markets, but the markets are organized, because those are hundreds of thousands of different separate systems, silos, and they are not integrated in between. And if you would make something that blockchains provide on this world, Web2 world that we have right now, you would need to integrate everyone with everyone through API, which is not possible physically. So this is what all those family offices are looking for, because that will make them ease of making decisions with their investments. Today, I'm investing into Tesla. Right now, I'm swapping my Tesla stocks into Chinese gold mining companies. And tomorrow, I'm swapping 50% of my Chinese gold mining companies into Australian something, blah, 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 right? And that's what blockchain provides, a freedom of use of your asset on that kind of level. And the blockchain is basically a very simple thing, one universal layer to exchange any kind of digital assets in between. Just it.
Right. Yeah, right on. And there's also a very good quote that I think just wraps up the entire promise of interest. You know, those foreseeable future changes, not only highlighted by John Patrick Mullin from Entertain on Paweł Łaskarzewski on Nomad Fulcrum, because I'm talking about here Etienne Daniel, head of business strategy right there. And the token market will be larger than the securities market, because in some way it will absorb the securities market. All the securities can be tokenized today. The beauty of the token is that you can represent anything and not only securities, and that is what will drive at first the growth of the token, right? So isn't that actually a very good summary of what we all have covered today? Having so many of those good future kind of like, coming up, those trends that are very strong, that are quantified, there are good numbers for it. There is interest, there is relevance, there are big players on our side. There are people who are starting to notice, from high-end top institutions, not only the ETF providers, from people who actually see a value in what I very much love for the quote from your very website, from Mantra Chain, right there, permissionless chain for permissioned applications, right? There are people who are starting to notice that there is a change, that there is an actual shift in this hidden revolution. And well, there is not much more left to be said, except for appreciating your time, JP, and your time, Paweł, because that's definitely a very good dose of very lightning fast, loads of information, loads of knowledge. Same approach as well, right? We don't know where the future will be. However, it seems that there is a rising tendency towards those tokenized RWAs. And here we are joined by this future prospects, JP Mullin, who's the CEO and co-founder of Mantra Chain, and Paweł Łaskarzewski of Nomad Fulcrum. Gentlemen, thank you so much for your time. Thank you for coming over. It's been a true pleasure. I've been your host, Adrian Zdunczyk, CMT Charter Market Technician. Stay tuned for the next episode, because we're going to discuss and discover marketplace mavericks platforms powering tokenization. Thank you so much. Stay tuned. God bless you. I'll see you around. Bye-bye.